Hi, this is Jeffrey Kurt, Kerr Financial Group. Today's Monday, April 29, 2024. Economic data going to be coming out this week and lots of corporate earnings for the first quarter of 2024. And those are going to be important too. But the biggest event for the week is going to be the Federal Reserve on Wednesday making, decision on interest rates. Now, they aren't going to do anything. They can't cut, they're not going to raise, so everyone's going to be focused on what Powell, well, first of all, the statement that gets released, and then secondly, what Powell's press conference and how he, what he says there. It's somewhat remarkable that the financial markets virtually closed down when during this event of the interest rate decision because the Fed's not been very accurate. They get over 400 economists and don't get it right. It's easily argued that the Fed is behind the main cause of the financial crisis of 2008, 2009. More recently, they were telling us with a lot of confidence, inflation is going to be transitory. We got it under control. Well, that's clearly not the case. Inflation keeps going up. And more recently, late last year, Powell pivoted in December and basically said, we're going to start cutting interest rates soon. And they're not going to do that either. So again, I don't understand it. I do understand it, but it's a puzzle why there's so much focus on what the Fed says and does when their accuracy seems to be a little bit challenged. So I think another important thing here regarding interest rates is the market's already acted. The market has increased interest rates. I think a couple of things, and try to point this out, for those of you who may not understand, bonds trade all the time, corporates and municipals and treasuries. So that interest rate assigned to a particular class of bonds, like a treasury or corporate or municipal, sovereign debt, this all constantly changing in the aftermarket, and the markets have taken interest rates up. So beginning of the year, the 30-year Treasury was at 402. Last Friday closed at 478. Huge move up. The 10-year, 386 at the beginning of the year, 467 last Friday. Interesting. The 3-month paper, which started the year at 535, virtually kind of the same, 541. See, that's the point. Then the short end of the curve, that's the only point the Fed can control. And so, 4 months ago, 5 months ago, we were expecting that short end to come down a lot, and then it hasn't. And then the longer term interest rates have moved up, has changed everything. And also, I don't see how the Fed can effectively do anything at this point. Inflation looks to be getting, accelerating too. Some forecasts out for the rest of the year. So then this is a big problem. Now again, can the Powell try to put some spin on what's going on with his statement on Wednesday? Certainly, and the market's begging for it too. So we'll see how that goes. I'll report back before the announcement on Wednesday. Good luck out there, and thank you for listening. Goodbye.